look, I mean, game on today from a macro perspective, and will it carry on into the tech outperformance, do you think?
Hi, great to be on with you. Look, it's a good risk on day. I think there's fundamental reasons for that. You know, of course, there's a discussion about rate cuts coming back onto the agenda. But I think more fundamentally, we can see that from the economic data, it's slowing, but we're not talking about a weak economy as yet, at least. So this is still a fundamentally strong economy, which means that earnings should be fairly solid as we go through the year. And that should translate into a broadening of the rally, which is why you're seeing so many of the indices reach record highs.
Seema, hey, it's Ed in San Francisco. I've been looking at all the index level energy so far year to date, right? And you look at the NASDAQ 100, S&P 500. I can't believe we showed the Dow Jones Industrial Average at the top of this program today. But I think what I'm trying to find out is if there's any commonality in the direction of the market and strip out the Mag 7, because I know that that's top of mind for so many people. Is there something in common for this market, or is it still dominated by our view of those single technology names?
So I think those single tech names, they are clearly still dominating the market. They're driving a lot. But what you have seen from the most recent earnings season is that this good performance is spreading out to other parts of the economy. Other sectors have done pretty well. So if that can be maintained, and particularly if you do actually start adding in those rate cuts towards the latter part of the year, that will help the story, particularly for certain segments of the market. I mean, even if you're just thinking about small caps, they need those rate cuts. But overall, this is a broad, good story. We still probably need to see a little bit more evidence in order to secure that perspective. But at least for now, the evidence that is coming in suggests that this isn't just a year for the Mag 7, but it's going to be a year for the broad equity market.
What about the valuations of, well, they're fewer than 7 now when they're magnificent, but more broadly, let's call it chip stocks, let's call it the winning formula of Nvidia, of, well, Alphabet, even Apple getting some lift again now. Are those valuations out of whack?
It's interesting. I was traveling across the US last week, and I was with investors everywhere, and that was the question that still keeps coming up: is, do we think of this as overvalued, and is it time for a correction? So we would definitely push back on that. Yes, it's a little bit frothy, but do we make comparisons to the dot-com bubble? Absolutely not. These earnings are somewhat believable, maybe a little bit frothy, as I said, but there's actually something fundamental in those valuations, so it doesn't really concern us. Inevitably, with this kind of market, when there's so much good news priced in, there's always going to be risk of a bit of a pullback. But we look at the tech story as a long-term play, and from a long-term play, it's still one of our favored areas of the market.
You talked about the good news that's priced in, Seema. I don't want to bring the mood down, but something we've been talking a lot about recently on the show is the relationship between the US and China, whether it's constructive or otherwise. Is that a headwind you're factoring in right now, particularly when you look at the technology sector?
So inevitably, it's something that we do need to consider, especially when you're going into the presidential election, where China is going to be top of the news as we get closer and closer to that point. So it is something we consider, but I think it's very much on a single stock name basis, because there's some which are going to be particularly exposed and others which are not so much. The good news from a China standpoint, though, is that from the most recent data that we're seeing come in, there does seem like it's a bit of a cyclical upturn. It's nothing to rave on about, but something at least to lift at least expectations. If that is carried through, then certainly for a lot of those other those bigger multinational tech companies which have got so much exposure to China, it does suggest that they're a little bit less at risk than we would have considered. But certainly the geopolitics is something that we always have to watch. But it's not yet at that point where it's changing our perspective on positivity about the sector.
I like that we go global, because, look, it's not just US stocks that have done particularly well of late. Japanese stocks on a tear. European stocks 600 been in at a record as well. Where are you liking other geographies right now?
Yeah, and it's a great question, because at the moment, I mean, at least for the last couple of weeks, what we've been challenged with in the market is that although I think a lot of people continue to believe in US exceptionalism, they have been confounded by the fact that the rate cut debate continues. We're not very sure about where that's going. When you think about the growth story, you're starting to see economic downside surprises in the US. And then, of course, there's evaluations. So then this is probably a good time to start thinking outside of the US. And there are some good stories. So even if you think about Europe, which is the perennial disappointment, but now you're seeing that we know what the ECB is going to do. we have, I think, pretty much good confidence that there's going to be cuts in June and then thereafter. We know that we're starting to see a cyclical economic upside, surprise, not an acceleration, but at least we're seeing some good news come through, and then valuations more attractive. So if you look across Europe, that's fairly good news. And even in China, as I said, given where sentiment was, you couldn't get much worse than that. And now with the economic data seeing some signs of brightness, that is looking like a more attractive part of the market too.
Seema, you're a regular on Bloomberg Television. You're a regular here on Bloomberg Technology. Away from the markets, I wanted to ask you about how you're using AI at work or at home. We're going to be talking later about AI-driven search. What have you been up to in the world of AI?
Well, look, I mean, I think any company out there has to be embracing AI and trying to figure out where they can use it in any parts of work and home. So from a work perspective, of course, trying to adopt AI into our models, trying to analyze the companies from a single sector, single stock perspective, that is going to be the easiest way to try and do full analysis and get a full, complete level of information. So that is something that we're trying to bring into work. I have small children. AI is the stuff that they talk about at school as well. So you can see that this is everywhere. It's not just dominated by the finance news.